Hey traders, welcome back to my channel. My name is Desmond Samuel and I'm back with yet another episode of our weekly Forex Forecast. Now, to kick things off here, we have the euro dollar on our hands. So the first thing here is, ideally, if you had gone through my previous videos, you will see that this guy is still in some form of a downtrend. All right, overall, looking from the weekly time frame down, from the monthly time frame, everything seems bearish at this point. And at this time here, we are actually sitting on a very solid demand level here. So ideally, this level has been very solid. So as things stand, we're actually sitting on a very solid demand level. However, I don't expect this level to just get broken overnight. Obviously, this took a while to form. If you look all the way back, I'm talking like monthly time frame, you can see that this level has held for quite some time, right? For years and years. So as you can see, this is very solid. We're talking about all the way from 2015 here, all right, and beyond. This is very solid. So you don't expect this to just get broken overnight, all right? So as you can see, we tried to break below, however, we just melted all the way back up. All right. So as things stand here, scaling down to the weekly time frame, I'm still bearish on this guy, because if you go from the monthly time frame here, I just want to use this naked chart to show you guys a few things here. If you go on the monthly time frame, then plot your Fibonacci right from the swing high to the swing low, you can see that we are actually in tune with the downtrend. We got here and then we just struggled to break above, and this was the 0.618 region, which was also a very decent, a very decent supply level. All right, so as things stand here now, we have actually gone ahead to reverse all the way from there. So now let me just take you guys to my other chart, which has, yeah, all right, so this is the monthly time frame here. This is how things look on the monthly time frame. Okay, this is just how things look on the monthly time frame. And if you plot your trend lines all the way from the monthly time frame properly, you can see that we are actually very bearish. If you plot your trend lines properly, you can see that we are actually very bearish, connecting from the very top here, then extending this guy all the way to the future. You can see that this is exactly where things stand. Now your trend line mustn't be thick, please. Reduce it to like 2. Yeah, so this is exactly how it looks. So the monthly time frame is, overall flow of the river is quite bearish. All right, so now scaling down to the weekly time frame, this is where we are at the moment. So we've been ranging for a while now, and it's very normal, guys. After an impulsive drop like this comes a correction, and sometimes the correction takes a while. And it would interest you to know that the market only trends for about 40% of the time. The rest of the 60%, the market is stuck in a range. All right, the market is stuck in a range. So as you can see here, so this was an impulsive drop to the downside on the weekly time frame, and we just came for a correction here, and it looks like it's going to continue lower from the way things look. All right, so now dealing with the current price action, scaling down to the daily time frame here, how things look here. So let me just show you guys what I'm actually looking out for. So I'm still bearish on this guy. As you can see, this is my zone I'm waiting for here. I need this guy to come all the way back into this bar right here, this supply level. That is exactly where I want to go short on this guy. So since we are now in the Christmas holiday, I mean, this is December, so there would be very noticeable reduction in volatility. All right, so what you should do now, this is exactly where your lower time frame strategy comes in. All right, so this is exactly where you want to be going into those 1 hour and 15 minutes time frame trading. All right, so what you need to do is just the exact same trades that you take on the daily time frame and on the weekly time frame or the 4-hour time frame, you need to actually scale lower to maybe like 1 hour and 15 minutes time frame to just scalp. So now when you're going into those time frames, yeah, you should be looking out for 30 pips, 40 pips. All right, 30 pips, 40 pips of move, and then you're out of the market, because now there is no guarantee that the market is going to keep going, because the banks and the firms that move the market are most likely heading on holidays. All right, so you really want to be very careful, and then take what the market gives you, pocket it, and then move. All right, next year is going to be a very marvelous year for us traders and for us as businessmen. All right, so now back to the current price action. Yes, scaling down to the 4-hour time frame. This is exactly what you need to be doing. As you can see, the market has gone ahead to form an inverted head and shoulders pattern here, which is in tune with my pullback that I'm actually waiting for to come into this region somewhere around here. All right, so this is in fact a decent chart pattern. This goes to show that this market actually would most probably head to our direction. All right, so what we need to do now is on 4-hour time frame, since this is established here, what you need to do is just do this. For those of you guys who would like to counter trade here, what you need to do is just do it. Allow the market break above this green bar here. Once you see a decent break above this green bar, you can go in and scalp on the 15 minutes time frame or the 30 minutes time frame. Please only look out for 30 pips to 40 pips or 50 pips. This is not a game where, this is not the time where you want to be holding on to 200 pips, 300 pips of trade idea. All right, so scale down to your lower time frame, make your entry, get 30 pips, get 40 pips, and you're out of the market. All right, so that's just that for. So for the euro is very, very simple. We need to see a break above here. Once you see that break above here, then it would expose this whole space here. However, in the event that I mean, for some reason the market fails to go higher and then dips below, then that would obviously take us all the way back to the weekly time frame to go and just look at how things are forming. But first of all, we have to see a very, very decent bearish engulfing candle break above below this blue bar. By the way, below this blue bar, a bearish engulfing candle break below this blue bar would definitely signify further downward pressure. However, as things look here, the market is sitting on a level, and we don't trade on the level, we trade the bounce of the level, we trade the reaction of the level. So that's why I said you guys ought to wait. All right, let's see what the market does around here. If it goes higher, fine. If it goes lower, fine. However, watch whatever thing you're doing there, just go for your 30 pips to 40 pips. That is maximum 30 pips to 40 pips. All right. So the next pair of analysis now is a pound sterling. The pound sterling also has a similar breakdown to that of the euro. So however, the pound sterling seems to be a lot faster than the euro. So this is the chart pattern forming here. All right, so this is also that inverted shoulders pattern forming. So this is the pound sterling. So what we need to do is very, very simple. For my last episode, I highlighted this level as my prime target for the pound sterling going higher. So what we need to do is, since we are actually aiming for this guy to go higher, this is a decent level to wait for the market to drop back into. Once you see that drop back into it, we can actually start buying. For those of you guys who are counter trend traders, what you need to do is just wait for the market to dip back into this bar right here. Once you see that dip back into this bar, into this yellow bar right here, then you can now start looking for buying opportunities to the upside, because my prime target remains the upper bound here, which is this yellow bar here. However, expect the market to pull back into this yellow bar. That is most likely going to happen. So expect the market to pull back into this yellow bar right here, because that is most likely going to happen, and then you guys can scroll down to your 15 minutes time frame or the 1 hour time frame or even 30 minutes time frame, then look for entries. All right, so this is exactly where your lower time frame trading comes into play. Very, very handy, because you really want to be in and out of this market at this point. You don't want to be holding on to trades. All right, so that's just that. For if you're buying the pound sterling here, it's very, very simple. This guy should go from here to here. All right, then pending whenever this happens, Q1 2025, I'll be here to let you guys know what I've got for the year. All right, okay, so the next pair on the list now is gold at XAUUSD. So ideally we have been highlighting initially we've been highlighting go to the upside for quite some time now, all the way from this lows here. We call that go to the upside, and it has been making a series of higher highs and higher lows. Every new high, like it was as if every new week came with a new high. However, as things stand here, the market is just thinning out at this point here, trying to find a balance at this bar that I highlighted in that previous episode. And scaling down to the 4 hour time frame here, it's very, very simple. My prime target for gold remains the same, $3,000 per ounce. However, as you can see, the market is just starting to thin out here, which is a sign of low volatility. So if you're the type that likes to trade, if you're the type that is going to trade in this, hold on guys, just give me a second guys. Okay, so if you're really going to take this trade here, it is advisable for you to scale down to your 1 hour time frame, or even the 15 minutes time frame, or the 30 minutes time frame. But whatever thing you do on the lower time frame, make sure that they're actually trading in the direction of the overall trend here, which in this case happens to be bullish. All right, so whatever thing you're doing down there on 1 hour time frame, with 15 minutes time frame, or the 30 minutes time frame, make sure that you're trading in the overall direction, which is upwards, which is bullish. All right, so the prime target for this guy is at $3,000 per ounce. However, we obviously have to get through 2,790. Once this is cleared here, we have space all the way to the upside. If you found value so far in this video, I urge you to go ahead and subscribe to my channel, turn on the bell icon, leave a like and comment. All right, so the next pair on the list now is the S&P 500. You guys know me by now that there's no way my video is complete without my first weekly video forecast is complete without the S&P 500. All right, so it's very, very simple. We were actually banging a lot of entries on this S&P, riding this guy all the way from this low here. All right, so we've gotten to this point, and then the market has gone ahead to create a new demand level. So it's very, very simple. Once the market creates a new demand level, you must always come back and test it and more like a revalidation of that level. All right, so what we need to see now is very, very simple. Ideally, this has gone in to balance out with a Fibonacci tool here. So what we need to see is this guy should dip back into 5,860 basis points. All right, so it's very simple. Allow this guy dip back into these points here. Okay, once that is said and done, you find a decent entry somewhere around here and write it to our prime target, which remains 6,400 basis points. You guys are hearing it here first on my channel. I'm calling S&P 500 to 6,400 basis points. I have been doing this all year long. Guys, if you doubt me, always go back and check my previous videos. All right, so S&P 500 without any iota of doubt is headed to 6,400 basis points. I see no reason as to why that should not happen. All right, so but first things first, we have to come into 5,860 basis points, find a decent balance like so, bounce off of that level, and then entries we made, and then ride this guy all the way to 6,400 basis points for the S&P 500. All right, so I think the exact same thing is also applicable to Nasdaq. Let me see what Nasdaq does. All right, so I think the exact same thing is also applicable to Nasdaq. Okay, yeah, so Nasdaq on the other hand is actually headed, it's just blowing through every single obstacle on the way straight to our 22,800 basis points target. All right, now those of you guys who have been with me for quite some time now, you can see that all the way from 2023 I had been calling the Nasdaq all the way from here. This was around January, right? From this point here all the way to the outside, and we just keep making new highs after new highs after new highs. And that's one of the benefits of staying subscribed to my channel and consuming my content. All right, now it's not about the weekly outlook itself, it's about you coming back here to gain reputation. All right, because you must always come back and watch these videos over and over again. That's how you learn. Most of the things you guys ask me in the comment section, you can get the answer by just repetition. Just come back and watch the videos again over and over again. That's just one tip. All right, because repetition always leads to mastery. Once you repeat something over time, you gain mastery. All right, so now we've seen a decent bounce off of this level right here, like so. Now let's scale down to our daily time frame here. So one of the one of the markets that also keep giving us some liquidity is the crypto markets, the indices, and maybe oil prices, and then gold. All right, now on the Nasdaq here, we're gone ahead to make again another demand level. All right, so what we need to see is very simple here. Now go ahead and then highlight this recent high here. Okay, look closely. Okay, so what you need to see is very simple. Allow the market pull back. I make these things look so easy, man. So allow this guy pull back into somewhere around here, like so. All right, allow the market pull back into some form of this demand. I think this is the most technical place to put it. Yeah, so allow the market pull back into this level here. Yeah, that's it. Allow it pull back into the zone here. Then you can go ahead and then blast this guy through to 22,800 basis points for the Nasdaq. All right, guys, this is a no-brainer, man. This guy is just going up. And one of the things about forex, and this is my strategy, is that I'm able to pick a pair. All right, I don't trade everything. You guys hear me call out like 5-10 pairs. I don't trade everything. Max I take is maybe 2 or 1. Right, so on this game here, the key thing is to identify a pair that can give you 1,300, 500 pips, 300 pips, 500 pips, 200 pips. Then you now scale down to your lower time frame, make entries in that direction. So you don't even have to make trades every single day or have an entry or anything. Just if you had held your entry from here, let me just bust your brain, guys. If you had held your entry from here, you wouldn't have to be finding another entry somewhere around here. You just allow the market work for you. All right. You already know what the prime target is, 22,800 basis points. Find your entry somewhere around here or even here. Allow the market work for you. It's very simple. Make that entry, move on to something else. Easy peasy. That's mastery. All right, that's mastery. So now what we need to see is very simple. Allow the market pull back into this demand level here, then wait for a decent bounce off of it. Once you see that decent bounce, entries are made. 22,800 basis points. Here we go. All right, so that's just that for Nasdaq. Looking to round this up now, let's talk about US30. Now, on the other hand, US30 is equally as volatile. Yeah, this is one of the most volatile of these indices. Yeah, and this, pardon me, let me just get rid of this guy. So now, this is how things look. Okay, again, repetition. The same thing that happened here is happening here. There is no new thing here, guys. The fact that the market is very dynamic. There is no new thing here. Demand level and supply level is just the exact same thing that keeps repeating itself in the market. One thing happened here, bam. Something is going to happen here. What do you expect? Bang to the upside. All right, so now we had this impulsive move, correction, first test of the demand level, revalidation of it, then rally to the upside. It's that same thing here. First creation of the demand level, that's first test, a pullback into here would definitely lead to another blowout to the upside. All right, so what you need to do is very, very simple at this point. So what you need to do now is wait for the market to come into 43,100 basis points, which is obviously this bar right here. And then if you look closely, it matches with that Fibonacci perfectly. The level is steady, the trend line is steady. I kid you not, once this guy is ready, we are blowing out to 46,870 basis points, approximately 47,000. All right, that is just that. And remember, we had an entry somewhere around here. We had an entry somewhere down here as well. So it's just about repetition. Just come to the channel, consume the content over and over again, guys. It's free, it's on the internet there, guys. Come to my channel, learn from Oren, watch and rewatch. No matter how old the videos are, I kid you not, it's the exact same thing. It's just process, learn the process over and over again. I kid you not, in no time you start breaking down just like I do with mastery. All right, so I let this guy pull back into this yellow bar right here around 43,000 basis points, somewhere around here with this trend line here, and then also with Fibonacci, then blow this guy through the roof all the way to $47,000 per ounce. Sorry guys, basis points for the US 30. That is the Dow Jones index. All right, so now looking to round this up now, I've spoken about AUDUSD. AUDUSD is also collapsing to the downside, guys. It would interest you to know that this guy keeps making series of lower lows and lower highs. Okay, so it's again very, very simple. This is where we are waiting for this guy to come into. And now, if peradventure, if for any reason the market happens to break below here and then now comes, because I mean the market is always going to move from level to level, from one level to the next level, and it has gone from this supply level in here all the way to this demand level. It's very simple. Once you can identify your levels, plot your levels, which is also something I teach in the course, which obviously is going to be out in a couple of weeks now. Yeah, so it's something I teach in the course. Once you're able to identify the trend, plot your levels, learn how to use the few technical tools like the trend lines, the Fibonacci, your demand and supply, your key levels, chart patterns, entry exits. These things are very simple. Then you now talk about psychology, capital, guys. Just wait for this guy to pull back into this level here, all right, or break below this point here. Once you see a decent break below here, it exposes this point, and you guys know the principle by now that the total amount of pips accumulated in here, once market breaks out of this range, whether it goes to the upside or to the downside, guys, you will always rally to the tune of the amount of pips accumulated in the range. It's very, very simple, guys. Once again, guys, you're always welcome. You're welcome. So moving on to silver now, which is a pair that I've been monitoring closely for quite some time now. Silver, on the other hand, is itching to make us money. However, guys, volatility is not there. December time, man, volatility is not there. Silver wants to blow out, but the conditions are not. You guys know, man. Conditions are not allowing it. All right, so the market is coming here to give us a full pullback. This is the most complete pullback, because now this is also coinciding with the trend line, which is also happening. This is the first touch here, second touch of the trend line. This is the third bounce here. All right, this is very delicate here, and this has happened. And not only did it happened with a chart pattern, which happened to be a double bottom. Guys, this guy is bullish. Believe me, this guy is very bullish. Just one key thing is missing, which is volatility. All right, once you see volatility back in the market, maybe towards the end of the month, or maybe Q1, January, first week of January, the banks and every single person should be back in the market. This would lead to increase in volatility, and then maybe just then this guy could head to our target at $48 per ounce for silver. Forget about this 35 here. We could even rally into $48 per ounce. All right, however, we have a minor obstacle, which is this black bar here. We need to get rid of this black bar here. Technically speaking, once you get rid of this black bar, it would expose $35 per ounce. It's simple. The market moves again from zone to zone. All right, so now to bring this to a close here, I think I'm going to talk about the USDCF. So this is practically maybe the last pair on this. So ideally, this is self-explanatory here. Just wait for the market to pull back into this yellow bar right here. It's simple. You pull back in here, expose this guy. All right, pull back in here, expose this guy. It's very, very simple. Hey, market come in, and when it comes in, guys, remember that we are in December. 30 pips, 50 pips, you're out of the market. This is where your lower time frame entry and your exits thing comes in handy for you. All right, look for 30 pips, 40 pips, you're out of the market. And learn how to allow compounding work in your favor. You must not catch every single thing right now. Allow compounding work in your favor. All right. So that's just that for this episode of our weekly forex forecast. Once again, actually, hold on. Hold on, guys. I have one more pair. The dollar index. Yeah. So you can see how the USDCF is lined up here. That's exactly how the dollar index is lined up to the downside. So there, you have to come down to go up ahead. I think that makes sense. Somebody type bars in the comment section. Type bars. You have to come down to go up. So we need to see this guy come into 103 region. Once you say this and bounce off of there, I kid you not. If this level holds, we could blast through the roof all the way to 115. You can see I've highlighted that level. How did I get that level? It's very, very simple. Top down analysis, guys. Just zone to zone, right? So this is a zone here. This is a zone here. The market has to go from here to here. If and only if this guy wants to continue bullish. However, on weekly time frame, we're coming to put in a bearish engulfing pattern, a candlestick here. So you guys have to be careful here. Look closely. Don't tell anyone that Desmond said it, but this is an engulfing weekly candle here. Be careful, right? Allow this guy pull back into 103. Once he pulls back into 103, that will be the deciding factor and the deciding. Oops, my battery is low. That will be the deciding point if this guy is going to continue higher or lower. It depends on this guy here. All right. So now scaling down to the daily time frame here, you can see that as euro and the pound sterling are forming head inverse head pattern, this guy is forming head pattern. So this is like the index of those other pairs, right? And that brings us to the end of this episode of our weekly forex forecast. My name remains Desmond Samuel, and leave a like and comment. Be sure to subscribe, then turn on the bell icon, and I see you guys in the next episode. Peace out.